New fund offer open till the end of this month. It's a fund-of-fund that invests both in equity and in debt, and the fund manager will review the asset allocation every week to decide how much money goes into debt and how much in equity. Do you see merit in this fund in the DSP BlackRock Dynamic Asset Management Fund? Is this new to us?
Yes, I see merit in this, and this is not very new because, if you have to look for the closest reference, the Franklin Templeton's Dynamic P ratio fund has been in existence for a while. And for investors, for conservative investors, asset allocation on a continuous basis is very important. But doing it on their own is complex. It has tax implications. So in that sense, there is a merit in this. And also the basis of this allocation, which will not be done by a fund manager, but it will be based on a yield gap model where the earnings yield and the yield on the 10-year GOI yield and a modified version of that will guide it. So it is a fairly mechanical process, and it could be useful for conservative investors trying to see growth.
Well, Dhirendra, there's one issue with this fund is that the underlying schemes of DSP BlackRock equity have not been performing over the last year. How serious a risk is that for investors? Is that something we should worry about?
That surely is a risk. That surely is, a little disappointing, but you don't have a control on the underlying fund. Also here, unlike the dynamic P ratio fund, there is a greater flexibility in terms of the kind of fund which will be part of the portfolio. Yes, these funds are not doing well, but over a long period of time, I think the returns don't matter as much. Still, it is going to be a good fund. Because what happens is, when you look at 5-year, 10-year performance of some of these funds, they are not as disappointing. Yes, near term, they are not the finest of funds.
Well, there are two more issues I want to ask you about. One is the tax treatment. We know fund-of-funds are not treated as equity funds, although they invest in equity, and the returns will actually be taxed at the end. And secondly, there is an added cost because there's fund management at two levels: the fund you're investing in and the fund that fund is investing in. Again, is the cost worth it, and would you still recommend we invest in this NFO?
Yeah, I think these two are certainly a disadvantage. And purely from the kind of convenience which an investor is derived from this automated asset allocation, which for an individual investor to do on his own may not be possible. So from that point of view, the added cost is not as much of a deterrent. And the tax implication of investing in a fund-of-fund where it will be treated like a debt fund, where the treatment so if one is looking at a short-term investment, this may not be advantageous. But if one is looking at for many years, the investment for many years, I think the method that you are entitled to is 10% on a flat basis on the appreciation, or 20% post-indexation, and 20% post-indexation might turn out to be fairly decent despite the tax disadvantage. So I think it's a suited vehicle for a conservative investor.
Right.
May not be as tax efficient. These two certainly is a deterrent.
All right, Dhirendra, after a very long time, Dhirendra giving a thumbs up there to a new NFO. Thank you so much for joining us.